Trading basics. This is Jason, and in this video I'm gonna talk about trading basics. When you want to trade binary options, the entire process takes a few steps. A. Learn how to trade the market. B. Choose a broker. C. Open an account. D. Deposit funds into the account. E. Trade. G. Repeat the process. Learning to trade is a continuous process. But basically, there are a few things you ought to master before you ever step into the binary options market to trade. Investment amounts, assets to trade, the various option types, how to place order for trades, how to extend trade duration, double trades or close trades early. At least the basics of support and resistance trading, as this is the foundation for most trading techniques and strategies. Broker selection requires due diligence on your part. You should only open accounts with regulated brokers, with good track record of transparency and timely fulfillment of withdrawals. Once you get a broker, you can open an account. The process has been simplified in such a way that a few minutes spent on filling an online form is all it takes. After opening the account, you need to activate the account by submitting your identification documents like international passport, driver's license, and a utility bill or bank statement. Once completed and you have your login details, take some time to study the layout of the broker's platform. Then deposit funds using the following methods. 1. Credit or debit cards. 2. E-wallets, example given, Skrill, Cashew, WebMoney, Neteller, etc. 3. Wire transfers. And 4. Other means that are locally acceptable. If you use an American broker, you may be able to use PayPal as well. When it comes to trading, I must mention that it is not necessary to master all trade types. I will identify the various trade types in the binary options market so you can select the ones that suit you. The trade types in the binary options market are 1. Call put, also known as the above-below, up and down or classical trade. This trade tests market direction only. The bet is based on whether the price of the asset will end higher or lower than the market price when the trade expires. Take an example. John wants to trade the EUR-USD. The market price is 132.30. He sees a falling wedge on the chart and decides that the asset will move higher before the day is over. He selects the call option at 132.30 and invests $100 into the trade, aiming for an 80% payout. By the end of the day, the EUR-USD is at 133.20, which is higher than the entry price. 2. In-out, also known as boundary or range option. This is a bet on whether the asset price will stay within a defined price range or break out of it. An example of this trade is as follows. Jill is waiting on the non-farm payrolls report, which is due the first Friday of the month. It is late evening on Monday and market seems very quiet with little movements on stocks. She decides to trade the in-out trade on Google stock. The upper price is at $691.95 and the lower price is at $691.50. The price of the stock is currently at $691.80. She decides that Google will stay within this range and selects the in option with a 6-hour expiry. In 6 hours, Google stock is at $691.79. A close call, but the stock stayed within range. Jill collects her payout and moves to the next trade. 3. Short-term options. These are call-put options that have expiry times of 60 seconds, 2 minutes and 5 minutes. Option Builder. Call-put bet with the ability to customize investment amount and set a time for the bet to end within a 24-hour period. Available on spot option platform. Jabino is a trader in a hurry and likes the fast-paced trades. He's not comfortable with the 60 seconds option, but has a strategy with which to trade the 2 minutes option. So he goes for it, entering a 2-minute trade on crude oil at $48.92. 2 minutes later, the price settles at $48.92 after a wild ride which saw prices go even up to $49.89. Cebino has neither gained nor lost since the trade settled at the entry price, i.e. at the money. His original investment of $200 is returned with 0% payout. 4. Long-term options. These are bets with long-term expiry times, such as the end-of-day options. 5. High-yield options. These are option trades that pay out up to 500% for the asset to touch a strike price located above, touch up, or below, touch down the market price. There is also a high-yield boundary option as well. Arrigo is a trader with a knack for taking high risks. This time he decides he will take a risky trade on gold, choosing the high-yield touch-up option. Gold is presently at $1,243.50 and Arrigo believes that the price will hit $1,250, the strike price for the touch-up trade before the week runs out. He's promised 250% payouts for his $100 investment, so he jumps in. However, he sets a loss return of 20% for the trade. A week later, gold has actually risen but stopped short of the mark. Dejected at the loss, Arrigo finds some comfort from a return of 20% of his 100% investment as a result of the loss return function he deployed before the trade entry. 6. There are various other speculative bets which are customized to individual brokers. Let us take an example of how to initiate a trade in binary options. How to execute a call-put trade. This trade is present on all binary platforms irrespective of nomenclature. In this trade, the assessment of the ability of the asset price to end up higher, call, or lower put than the market price at the time of trade execution. To trade this option, you need to A. Choose the asset to be traded, B. Choose the expiry time from the options provided, C. Select either call or put depending on the direction you feel the market will assume, D. Enter the amount to be invested in the trade, E. Click on the apply. How to execute a one-touch, touch-up, touch-down trade. This trade presents two strike prices, one located far above the market price, touch-up, and one located far below the entry price, touchdown. To trade this option, you need to choose the asset to be traded. B. The expiry time is usually fixed by the broker at 1 week. C. Select either touch-up or touchdown, depending on the strike price you feel will be touched by the asset's movement. D. Enter the amount to be invested in the trade. And E. Click on the apply. How to execute a boundary trade, in, out, or range option. This trade presents two prices that will serve as boundaries for the trade, a price floor and a ceiling. To trade this option, choose the asset to be traded, B. Select an expiry time from the options available, C. Select either in if you believe the price will stay within the boundaries, or out if you believe the asset will either touch or step out of the price boundaries. D. Enter the amount to be invested in the trade. E. Click on the apply. The short-term and long-term options are basically call-put options which require setting the expiry times fixed for the trades. Take note of the withdrawal conditions stipulated by your broker. Also note any withdrawal fees. So here's the conclusion. Follow these principles, apply the same process all over again, and if possible you can start using automated signals or robots to augment your trading efforts. To find the most suitable binary options to trade, just click the link below in the description to read our reviews.